explain I want to explain how to read an insurance policy. First, we'll start with the declarations page. This describes what coverages you've purchased and what forms will be included. This policy contains, you see the policy limits out to the right over here. This policy has inflation coverage. You can also see that at the bottom it says loss settlement provisions, replacement cost, similar construction. That's A1, and that's the best kind that State Farm offers. A1 limited replacement cost for the property. This next page is called an outline of coverage, and this is a form that the insurer is required to provide by Alabama law. Unfortunately, it's not binding on the insurer. It can be a good summary, but I wouldn't count on it. Now, a lot of times when you renew your policy, you'll get a copy of the declarations page and the endorsements, but not the policy booklet itself. These endorsements are things that are unique to either your policy or the state that change the policy booklet slightly. Next thing we're going to look at is the actual policy booklet. The policy booklet is the contract between you and the insurance company. It's a super important document. It's also very helpful for you to be familiar with this document, ideally before you buy the policy, but certainly when you have a claim. This is the table of contents, obviously. I've highlighted some of the important parts. Coverage A, dwelling. These are your Section 1 property coverages. And coverage B under the State Farm lingo is personal property. Some policies word these coverages differently. They don't all call them coverage A, coverage B, or coverage C, but most homeowners policies contain versions of these coverages. Coverage B is personal property, and that would be things like TVs or your couch, your bed, your linens, your clothes. That describes what type of property is covered there. Coverage C, for loss of use, this includes a category called additional living expense, which is a common thing. Say you have to be out of your house because of the damage to your house by a fire or a storm. This part will pay for any additional expenses that you incur over and above what you would normally incur living in your home. It would pay the amount necessary for you to live in the same way, in the same standards as you had been living before the loss. It's supposed to put you in as close to the same position as you can be in prior to that loss. Of course, the actual words that are in here are what control, and so if you want to know the specifics, you need to read those. And sometimes these different provisions come into play in lawsuits, particularly when it comes to the length of time that additional living expenses will be paid. I've gotten into large arguments with insurance companies about the length of time that they will continue to pay additional living expenses. A lot of times they don't pay those additional living expenses any longer than they have to. Loss is insured. This is the next part of the policy about the types of things that are covered. So it's called an all risks policy, and it says we will pay for accidental direct physical loss to the property described in coverage A unless the loss is excluded or limited in losses not insured. And then for the personal property, you can see it lists the types of damage to personal property that are covered. And losses not insured, these are also known as exclusions. It's a good idea to be familiar with these. Loss settlement, this is another part of the policy. And you can see here where it says A1, replacement cost loss settlement, similar construction. This is an important provision. It says, we will pay the cost to repair or replace with similar construction and for the same use on the premises shown in the declarations. The damaged part of the property covered under Section 1 property coverages, coverage A dwelling, except for wood fences, subject to the following. And this kind of confuses some people. Until actual repair or replacement is completed, we will pay only the actual cash value of the damaged part of the property up to the applicable limit of liability shown in the declarations, not to exceed the cost to repair or replace the damaged part of the property. And then, when the repair or replacement is actually completed, we will pay the covered additional amount you actually and necessarily spend to repair or replace the damaged part of the property. And that's important because while this is a replacement cost policy and it's supposed to pay for the same type of materials that you previously had, in order to get the full benefits of the policy, typically you need to go ahead and make the repairs. And until those repairs are made, you'll get the actual cash value, which is a lesser amount. Definitely be familiar with this portion of the policy because it provides things that you need to do. For instance, protecting the property. It says protect the property from further damage or loss, and also make reasonable and necessary temporary repairs required to protect the property, and keep an accurate record of repair expenses. Homeowners policy also contains liability coverage. We don't deal with this as much, but say if someone was injured on your property and they filed a claim against you, then that's when this liability coverage might come into play. So I hope that this has been helpful. If you have any questions, don't hesitate to reach out, and I'll see you next time.